How to pay zero in taxes in wholesaling. Guys, it's Rick Ginn, and this video, I'm going to walk you through the tax situation of wholesaling. I'm going to show you what most wholesalers do, and I'm going to show you why you're missing the biggest point on how to minimize, if not pay zero taxes in your wholesaling business. But before I get into it, do me a favor, smash that like button, hit that subscribe button so other people can learn about wholesaling. So you want to learn about how to minimize your tax bill, or maybe you just want to pay zero in taxes. We have to do it legally. So we have to explore what most wholesalers do when it comes to their tax structure setup. And I know this one all too well because this is my story, and I almost guarantee it's going to resonate with 9 out of 10 out of you. So you got into wholesaling, maybe you saw a video from myself or Zach or somebody in the business, and you go, man, I'm all in. This sounds exciting. I can't wait to get wholesaling. And the first thing you do is you set up an LLC in your state that you're doing business in. Awesome. You did the legal side. And a LLC is a limited liability company, and that separates your business from you personally so you don't get sued, you don't lose your house, you don't lose your car, and you don't freak your family out. It's the right thing to do. You can then open a banking account and people can pay your business, and that's why they do it. That's step one. Step two is you go and register to get your EIN number, and that stands for Employee Identification Number. It's basically, in essence, a tax ID number for a business, just like an individual has a social security number, a business has an EIN number. And you can go on the .gov site. It's basically the IRS. You can get it, and there's no cost to it. The LLC, there is some filing fees and costs, $7,500 to $200, and you pay that annually through your state. Congratulations! You set up your LLC and you set up your tax ID number. You dealt with the IRS. You're good to go. You open your bank account. You do a bunch of deals, and then you decide to meet with your local accountant or whoever it is, maybe an online accountant that goes, hey, can you tell me how your business structure is set up? And here's what I said. I go, I legally set up my company. I got my LLC, and I have my tax ID number. Hey, Rick, what's your entity's designation and how is it clarified? I don't follow. Well, did you set up an S corporation? Did you designate a C corporation? Are you a multi-member? Are you a sole proprietor? Is it a partnership? I don't know. Well, Rick, how you classify your business has a dramatic effect on how you file your taxes. Are you doing an 1120? Are you doing a Schedule K, a 1065? Are you doing a Schedule L? Are we issuing K1s? Are your taxes due on March 15th or April 15th? Rick, these are big decisions you shouldn't take lightly. And I got to tell you, I was confused. I was in shock. And here's the best part is, I want to say when I first set up my wholesaling, I set up in March. I did exactly what I told you. I got my LLC, my EIN number. I did all that business. And then I met with an accountant in February to get my taxes done. And I didn't have a lot of options. And I got hit with a massive tax bill. I did everything wrong. I did not understand any of it. And I want to walk you through and make you understand, not make you understand. I want you to understand you've got to do more than the simple 2-dance step as a wholesaler. Most people do this. You've probably done it yourself. You got an LLC and an EIN number. Guys, that is not going to help you. That is not a tax strategy. That is the bare basics so you can operate as a business. And if you don't change this now, you're going to have problems when your tax bill comes due. You're definitely not going to get it down to zero. Let's get into the details of it. So you set up your LLC with your state. You can easily do that. It's not that complicated. And that specifically is setting up your articles of organization. And that's done automatically. State, you put in your members, you put in contact information, and that's it. The state wants to generate the fees. And that's about where it ends with the state. They just set up, so you got a license to get an LLC. That's it. And it's active as long as you pay your yearly dues to that. The next step is you do your EIN number. Once again, that's super simple. What you're missing is once you get that EIN number, you should actually read the letter. And you'll see on the bottom, there is a section for entity designation. And depending on what state you're in, you have a specific time frame. You actually have to declare what type of corporation you're going to be. There's an S corporation, a C corporation. Is it a multi-member? Is it a partnership? Is it a sole proprietorship? And this is what is given to the IRS that classifies how you file your tax return. It's also going to designate when you file your taxes, if it's in March or if it's in April, and you need to know this. The challenge is most of you don't read this letter because you don't understand it. That's at least my interpretation of it. And you only have so many days, usually within 90 days, to make that classification, or listen to me, the IRS automatically defaults you into a classification, which sticks you in a corner. Now, can you change it? You can, but it takes time. If you ever try to communicate to the IRS, if you get something done in 90 days, I'm amazed. On average, it can take 6 to 12 months just to change an entity classification. It requires documentation. You got to fill out forms. It is so much more work on the back end. And wouldn't you rather know on the front end so you don't make this mistake? I made this mistake on almost every company I opened up when I first started wholesaling. It's because I didn't understand and I wasn't educated on it. And I'm trying to do this video to save you the pain I went through. Honestly, this mistake cost me about $50,000 in my first year because I did not understand the entity designation with the IRS. I was clueless, I made assumptions, and the IRS doesn't care what you think, they just care what you owe. Now, this also leads to all sorts of questions on how you're going to keep bookkeeping. And if you're like me, you ran it off your checking account when you first did it, it's an absolute nightmare to do it that way. Go out and find a bookkeeper. That is my recommendation from up front. In the beginning, you can kind of do it yourself. My recommendation is stay away from QuickBooks because QuickBooks is going to hook you in. And the problem is you don't understand the chart of accounts and you don't understand the difference between a liability and an asset. I'm talking on an accounting scale, and you definitely don't understand balance sheets. And if you work with a bookkeeper for a nominal amount, don't get an overseas bookkeeper. Get someone, honestly, you could probably do it within $500 within a year if you have minimal accounting, and they will teach you where the income goes and how to match it up to your balance sheet. I wish I did that when I first started out wholesaling. I didn't. I left it all to an accountant to sort it out in the back end. And if you don't have good bookkeeping, there's nothing a CPA can do for you. So these habits have to start early. If you do have an accounting background, great, more power to you. But for the most part, guys, a $500 investment is a lot cheaper than a $50,000 investment because the accountant could not figure out what your books look like. So I said the word balance sheet earlier. I got a hard crash course on how balance sheets work. I always knew about them because I have a finance degree, but like when it's your own personal balance sheet, this is what truly tells the health of a company. You see, a balance sheet is going to tell you about debts owed on a property. It tells you about income, and it puts everything together. Most of you are just used to doing profit and losses, which you take the income for that year, you classify the expenses, and then you have it a P&L. A P&L actually carries over to the balance sheet. And understand this, if your business does gross receipts over $250,000 a year, you actually have to submit your balance sheet with your IRS tax returns. Honestly, I know a lot of wholesalers, they don't ever even bother to do a balance sheet. And that's going to trigger an audit. It's going to create all sorts of problems for you. And you better learn this sooner than later. Guys, to do over 250 grand is not hard, and you need to master the balance sheet sooner than later. Now, the good news is the sooner you do this, the easier the transition. For those of you that wait years and years, it's extremely painful. Which leads me to the last section where this all kind of ties in. When you do make that beautiful profit in wholesaling, how are you going to pay yourself? You're just going to take it out of the bank account? You're going to, no, Rick, I'm going to do payroll. Well, it depends. You'd have to be a C corporation to do that. And then you got to do payroll taxes. And do you understand how double taxation works? Or you chose to be an S corporation. Do I have to do payroll, or can I just do a distribution? What's a distribution and how does that work? You see, these are all questions I had to find out the hard way. And what happens is we start with our corporations, work our way down, And then we get to your personal tax return. And depending on how you set up your LLC, all your profits could wash through your personal tax return and put you in a 37% tax bracket. Now, I don't know about you, you probably watched the beginning of this video, go, Rick, how do I pay zero taxes? The key to starting it is understanding it. And this is where you should get some advice. Now, lucky enough that me and Zach have gone through this pain, and I'm going to offer you a solution. Check out wholesalingtax.com. It is our Prime Corp services, which we use in our business, and they have given us an offer where they'll actually help you set up your LLC for free. You have to pay the state filing fees, and you can get some simple education on the different entity structures for the corporations. If you decide to get some additional help, which I strongly recommend, it's much cheaper to do preventative maintenance up front than it is to do reactive stuff when you get an IRS bill. I want to solve your problem. I don't want to complicate it. You have to understand how this works. So guys, don't do this on your own. Don't make the same mistakes I did for over 5 years and have terrible books, not knowing what your entity structures, and hope to pray that the IRS doesn't crack down on you. Go out and do preventative maintenance, and you will sleep better at night. You'll get an education on how taxes work, specifically entity class designation. Remember, setting up your EIN number alone and your LLC is not a strategy to minimize your taxes. If anything, it's going to have the opposite effect. So if you want to learn on how to tie this all together specifically for wholesaling, go to wholesalingtax.com. We have trained them to focus specifically on the wholesaling business. So you're not telling them some wild stories like, what's this wholesaling? Guys, if you go to your local accountant, they've most likely never even heard of the wholesaling business. You're wasting your time. Find someone who has experience in wholesaling, wholesalingtax.com. Get the right advice. And guys, let's pay the least amount as we legally can in taxes. That's my goal. I want to share that goal with you. Wholesalingtax.com. Check it out. And you can get some more information at freewholesaling.com if you want to get educated. Guys, let me know in the comments if you want to pay minimal or 0% in taxes. And as usual, if you got value from this video, smash that like button, hit that subscribe button so other people can find the truth out about wholesaling. This is Rick Ginn. I'll see you in the next video.